Hey friends, welcome to today's meeting. I appreciate everyone that has joined us. Congratulations for joining this meeting. This is our much anticipated meeting. Yes, so I'm excited to be here. I'm excited to be here. I hope you are as well. So, the meeting today is going to be packed. I hope I'm loud and clear. I hope I'm loud and clear. Let me know in the chat. Am I loud and clear? I hope everything is fine. I hope I'm not echoing. Let me know if I'm loud and clear. And okay, great. I appreciate everyone that has joined. Thank you for coming. I see every one of you. Let me see. Okay. From the list of people here, I can see we have I see Engineer Nathan, Big Sam. I see Michael Bamidele. I see. Hello. I see. Okay. I see Olayiwole. Oh, the lights on. We are here. Welcome. 2000. Yes. I acknowledge your presence, everyone. Thank you for coming. Thank you so much. Okay. Few minutes more, and then we are going to start today's meeting. We just wait for some of our team members that are here to be here. Please stay on the line, and in 3 to 4 minutes, we are going to start the meeting. Thank you for coming. Okay. Permit me to start the meeting, everyone, officially for today. Okay. This is like I said, this is a much anticipated meeting. I myself have been anticipating this day. Okay. So I'm glad that finally we are here. So today, we are going to be talking about futures trade and how to pick a coin, how to develop your own signals, how to set up your margin configurations, how to calculate your first buy in amounts, also how to set stop loss. Yeah, how to set stop loss, because in futures trade, there is a risk of liquidation. Okay, you could get liquidated if care is not taken. So we try to mitigate this risk because the market is not our friend, neither is it our enemy. So as much as we use our confluences to get the kind of setups that we want, the market could still go against us. The market could still go against us. The market could still go against us. That is why we always advise for a proper risk management, a proper risk management, and so that you can know how to use stop loss orders. You must know how to use stop loss. Okay, so that is it. I just hope we are going to be able to touch all these areas for today. Before I start sharing my screen, let me see what people are saying in the chat. And okay, I have co-hosts with me. I have my co-host here, Delight Ob. You are my co-host. So in case my line is breaking or my network throws me out, Delight Ob, you should please assist me. Or if there is a noise in the charts, or or if there is a chart, if there's a message in the chat, maybe somebody wants to say something and I can't get to see it on time. So you should please assist me. You can always unmute so that you notify me. And if I go off as well, you help me to hold the people. So the light up. Thanks for working with me today. So I'm going to go ahead to share my screen. I hope I'm loud and clear. And how is everyone feeling today? Let me know. How are you feeling from where you're joining us from? How are you feeling today? Let me know. How are people feeling today? I see Big Sam saying he's at work. Says I'm at work, but I'm with you. Okay. Okay, I see this is okay. Uh, Okay, Michael Bamidele says he's good. He says good coach. Engineer Nazi says Engineer Nazi says normal vibes. Okay, Engineer Nazi. Michael Bamidele says he's good. Okay. Yes, 2000. 2000 says I'm good. 2000, you can click on your name on Zoom and then you change your name so that we know who we are interacting with. Do you understand 2000? You can double click on your name and then you rename. Oh, I see Damsol. Damsol is here. Welcome. Welcome. Damsol says he's good. Okay, thank you for joining us. Okay, so just a moment. I'm going to share my screen. Yeah. Okay, now I'm sharing my screen, I believe. So, okay. Let me start by introducing what's futures trade is to people, in case of people that are just joining. Okay, some people know about this, but futures trade is just like we trade in the sports markets. We buy and then we expect to take profits when the coin is up. So we do the same thing on futures trade. They are the same coins that we trade, but there are some more benefits, which are you can be able to leverage. Leverage means that if you use a leverage of 10x, use a leverage of 10x, and then you instruct the robot to trade with $100, right? The robot will only take 10% of that $100 in your own capital. So you are instructing the robot to trade with $100, but on the real, yeah, you are trading with $100, but the robot will only remove 10% from your capital. The remaining 90% will be borrowed onto you by your exchange. That is what we call leveraging. So with royalq, we can be able to leverage up to 20x, which means when you use the 20x leverage, when you use a 10x leverage, it means that as you are trading with $100, remember your own capital is just $10 out of this $100. As you are trading with this $10, if the coin goes up by just 1%, okay, if it goes up by 1%, you'd be making a profit of 10 times. Okay, that is 1% times 10. Okay. Okay. This is okay. Am I loud and clear? Am I loud and clear? I hope there's no feedback. I hope there's no echo. I hope there's no echo.
Yeah, good.
Okay, thank you. Thank you. So, like I was saying, when you use a leverage of 10x, it means that the exchange will only charge you 10% of your capital. 10% of your capital. The remaining will be in your it will be in charge of your exchange. The remaining 90%, they'll be the ones to add it to your capital for the trade. So if you are trading with $1,000, only 10% of $1,000, that is what will be your own contribution to the trade. The remaining 90% will be paid by the exchange. I hope you have understood that. So how the leverage works in your profits, when you want to take your profits, the leverage, when you have instructed the robot to trade for you with $100, okay, and you have used a leverage of 10x. You have used a leverage of 10x. That means it will only take $10 from your own capital. The remaining $90 will be funded by your exchange, right? So when you make a profit of 1%, you know, it is only $10 that you are contributing to this trade. Futures trading and leverage helps you to manage your capital effectively. You know, you only have $10 or you only have $100, but you are not exposing all your $100 into a trade. You are only using $10 out of your capital, and then it will be as if you have used $100. So when the coin moves in your favor by 1%, okay, your capital is $100, but you have only used $10. It is the exchange that borrow you the remaining 90. So when the coin moves in your favor by 1%, instead of you know, your capital is $10. You are not the owner of the 90. They borrowed you, okay? Either you have the 90 by yourself, either you have it or not. The point is that you have opened a $100 trade, and you have only paid $10 for that trade, okay? So when the profit comes, it's supposed to be 1% of your $10, but now you'll be getting 10% of your $10. Because a lot of people always misunderstand this, okay? They will think that they are going to get 10% on the $100, okay? It's not 10% on the $100. It is 10% on your capital. That is what the leverage works at. Let me know if somebody has understood that. Please let me know if somebody has understood that. Let me know if I'm making sense. Let me know if I'm making sense. Okay, I see. Thank you. Okay, so that is it about the leveraging. So now that I have briefly explained, and then the other thing about futures is that you can be able to trade the other side. In sports markets, we can only trade a single side, which is to trade from the bottom to the top. You trade when the coin is low, when the price of the coin is low, and you expect to take profits when the price goes high. When the price goes high, that's when you want to take your profit. But in futures here, you can enter a coin when the price is high, and then you take your profits when the price is low. That is why you see different signals when it comes to futures. You see the one for long or buy, and you see another one for short or sell. Shorting or selling means that you are buying from the top and expecting to make profits when the price of the coin goes down. That is just like you are predicting that the price of the coin will go down, and then when it goes down in your favor, you make your profits. So after understanding what futures trading is, okay, after understanding what futures trading is, so that is the purpose of this meeting, to understand futures trade and how you can use it to trade with royalq. Now, I'm going to like to do a quick recap about the trade, a successful trade that we had last night. Okay, most of us in the meeting, if you are in our group, you will catch the wave of that signal yesterday when we traded the coin. It was what's the name again? Let me share my screen. So the coin we traded, that is okay, the coin is Fear, from Fear. This is the coin that we traded that gave us money yesterday in the group. This is the coin that gave us money yesterday in the group. So okay, so what happened was I used few things I used in this coin to get the signal. Okay. Up here was our entry. Right here, when the coin touched this side, was when we entered the coin, this side, somewhere around here. See, the coin was coming down, the coin has fallen down, and then it gave the signal, and I gave the signal so that we can trade it on preset price. Preset price was on this blue line. That was our preset price. So immediately the coin touched that price, it bought for most of us, and then we expected the coin to come down and give us a 10% profit, which is, if you're taking 10% profit, that is 10 multiplied by 10, that is 100% of your profit. So we entered the coin, and then the coin went down after we made our entry. The coin went down a little bit. So we had our stop loss somewhere somewhere not far from our entry. We had a stop loss around here, so that if the coin goes, we have a stop loss here. Here's our stop loss. That if the coin goes down, at this point was our stop loss. That if it goes down, if the coin goes down and touch this level, the robot should sell for us at loss. Okay, we said if the coin goes down and touch that level, the robot should sell for us at loss. Then we'll be losing like maybe 10% of our capital. Maybe you have used $10 as your first buying amount, $10, which is $100 on the leverage. And your trade has hit this stop loss if it goes against us. So from your $10, you are only going to be losing 10% of your $10, which is around $1. You are only going to be losing $1. But if it goes in your favor and then you make profits, you are going to be making 30% of your $10. 30% of your $10. So the whole profits that we took was around 10%, but I gave the signal. The first time I gave the signal, I said we should trade it with 3% take profits. We did 3% take profits. It delivered. We entered again. So here was the coin going down. Here was it reached here, then it started coming back up. Yeah, it started coming back down, It reached some places. We took our profits. We entered again. We took profits. We entered again. We took profits. It went down. We entered again. We took profits. We took profits. Like when we entered like 7 to 10 times yesterday, this coin, we traded it, and it delivered good profits for us. It delivered good profits for us. So, yeah, so I'm going to be discussing about, I don't know, most of us here, we are not familiar with TradingView. This app that I'm using now to analyze this coin is called TradingView. This is TradingView. And I know that most of us here, we are not familiar with this app that's called TradingView, which we need to be familiar with the app. We need to be familiar with it. That is where we do our analysis. As you can see, I did not use any indicators. No indicators were used to pick this signal. Just price action reading. Just price action reading. Okay. So yeah, I'm going to briefly explain about price action and few things that you must know, that you must understand about price action. This meeting series is going to be repetitive because there's no way you are going to understand in this single meeting. Even I will not be able to explain everything, but we are going to be repeating the meeting as frequently as possible during the weekdays, so that we can continue, we can have a continuation to the episodes, right? So today I'm going to start by explaining how to pick a coin using your TradingView. I will not go into how to customize your TradingView. For those that already have the TradingView app, okay, so for those that already have the TradingView app, it's just I'm just going to spend like 10 minutes to explain this. So if you already have the TradingView app, yesterday I just went to my royalq. I went to my royalq and then I came to my royalq, and then I was looking for opportunity to buy, opportunity to long the markets, which is in other words, buy. I was looking for buying opportunities, but I was looking for buying opportunities. So I came here on my own page, those that have watched the other videos or that has been moving with us previously, you know, as we pick our signals, you know, the criteria that we use to pick our signals. So that is good. So I was just here yesterday looking for a coin to trade. I was looking for a coin to trade, and then I check on the coins that are down. I click on 24-hour change, and I check on the coins that are down if I would see an opportunity to buy. And I was checking them, and I didn't get a good enough opportunity for me to buy in the market for yesterday. So I went on to look for the selling opportunity, so that I look at the coins that are up already, the coins that have pumped already. I look at the coins that have pumped already, so that I can now short the markets and believe that they will fall down and I'll take my profits. So I came there right here and I see the coins that have pumped, okay, like this, and then I saw fun at the top of it was fun USDT. So I clicked on the coin. I entered into futures. I checked it there in the futures market. I saw that it is there in the futures market because obviously it's a selling order, which is to short the market, to trade it and believe that the market will go down and then I take profit. So I was here in the futures market, and then I searched, and then I saw the coin fund USDT. And here was the candles. So basically I saw that the coin was pumping. And then it fell. It gave a sharp fall down. A coin that has been pumping so well, and all of a sudden it just fell down. It just fell down. So right at that time when it fell down was when right at that time when it fell down was when I started looking for an opportunity in the coin. I don't know. So I don't know. My royalty is acting up. Probably. So I hope you can see my screen. I hope you can see my screen. So I saw an opportunity in the coin, then I went into my trading view. And I searched for the coin, found US. Here was that point that I saw. Here was that time that the coin was going up. This candle right here. You can see here. You can see here that the coin was going up. You can see the rally. The coin was shooting up. Yeah. And then all of a sudden, after the shift, it fell down. You can see an aggressive fall. So to use that strategy that I use, to be able to trade using this type of strategy, you need to be able to spot an aggressive fall or an aggressive. You have to spot. You have to spot. Okay, so you have to spot when the coin has either fallen rapidly or it has risen rapidly. Either of the two. Okay. So either of the two. So right here, we can see that the coin just fell rapidly after a move to the upside. Then it fell rapidly right here. The coin fell rapidly here. We can see the black candles represents a downward trend. And the candles that are blue represents an upward movement. So you can see that the coin was coming from the down. The candles were coming from the down here. Then they started going up. They started going up, going up, going up. And it got to this point. Then it found a resistance. That top is now considered as a resistance. When the coin is moving up, and then it can no longer move up, and it starts going down. That point where it starts going down is called the resistance. Okay, it's called the resistance. So as it found the resistance, the next thing for the coin was that it fell down rapidly. You can see, fell down rapidly. So when the coin falls down like this, what do you want to observe? What do you want to observe when the coin falls down like this? There are some things you need to see in that coin. Firstly, I'm analyzing on the 15 minutes time frame. I hope you can see. 15 minutes. I was on the 15 minutes. Normally, when I do my analysis, I make it top down. Top down means to analyze from the higher time frames, meaning from the 1 day time frame, then you move down to the 4-hour time frame, you move down to the 1 hour time frame, and then 15 minutes, 5 minutes, 3 minutes, and 1 minute. That's how we do the top-down analysis. So you check from the 1 day. But that yesterday, I didn't even bother to make a top-down analysis. It wasn't a top-down analysis. If it was a top-down analysis, maybe it would be more than this, but I only saw the opportunity on the 15 minutes time and I smashed it. So when you see a coin that has fallen down like this, it was going up and then it fell down, or it was coming down and then it shoots up. Okay, so here is it going up. It's going to these points. Okay. So it was going up, came down a little bit, went up, came down, went up, came down. Okay, then it shoots up and came way down. So as it just came down like that, it created something that we call a break of structure. A break of structure. See, there are different types of break of structures. What are break of structures? When a coin is either moving up or down. Okay, like this one now. It was moving up here, and then it fell down. Okay, when it fell down, this place is considered as a resistance. And then afterwards, the coin shoots up and it broke past this resistance level. When that happens, this breakage is considered as a break of structure. I hope you are understanding. It is considered as a break of structure. So now we are having break of structures to the upper side. We are having break of structures to the upper side. So when you see these types of break of structures, you can decide to look for a buy position because it's breaking it to the upside. So you look for you don't trade against the coin, you trade with the trend, you flow with the trend. So it's going up, you look for buying opportunities. Buy and expect it to go up and take profit. So these are break of structures. Then when it's pumped up and it reached that support, that major support up there, it's reached that level and then it fell down. It created a break of structure to the downside. Okay, it created a break of structure to the downside. Here is the break of structure here. You can see that the last higher low that we have, when the coin is going up, it will be creating higher highs. What are higher highs? You can see that the height of the coin before was here. Higher highs, the support, the resistance rather. When the coin is going up, you mark out the resistance. Then when it creates a break of structure, and then it goes back down, okay, that is considered, this is considered a break of structure. And then when it goes back down, that side is considered as an higher high. This is a new resistance now. So that new resistance is considered an higher high because here was the height before, but it went down, then shoots back up, created a break of structure, and then it created a new high, making this a higher high. So when the coin is going up, when you want to identify the trend, you want to be able to tell, is the coin going up or down? How do you know? By identifying the highs and the lows. What kind of highs and what kind of lows are the coin making. So we could see clearly that it was creating a higher highs. Here's another high here. Here, then it went down, break of structure. Then it went down again, created another resistance that is another higher high, break of structure, went down, created another higher high, break of structure, went down, created another higher high. That's now considered as the major support. Why is it considered as a major support? Because now the price has resisted to break above it, and the price has fallen down. Now it has broken above the last higher low that we have. You know, when the coin is going up, you'll be seeing higher lows and higher highs. But when the coin is going down, you'll be seeing lower lows and lower highs. So here was our highest low here. Here was the highest low. Here was the highest low before it's crashed down. Then it broke that highest low to the downward side, which gives us a bearish sentiment. If you observe the coin, you see that the coin has been going up. So it's on a bullish trend. It's going up from here. It's been going up. But then, how do you know that a coin has changed the trend? It broke the last lower low, the last lower high. Okay. The last higher low, rather. This is a low, but it's higher than this low. That's why it's considered as a higher low. You know, it's low, but it's higher than this one. Now, this one as well is a low side, but it's higher than this low. And this low as well is higher than this low. So that's why they are considered as higher lows. So it broke the higher lows, created a break of structure, and he started retracing back up to the upside. That was when I catch the coin and I said, okay, let me look for selling opportunity because the coin has changed trend to the downward side. Obviously, because of the most recent break of structure that has broken it to the downward side. That has shown us that the coin is on a downward trend. It's going down. Even when you see that it created some green candles, went up, blah, 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 it doesn't matter. It's on a downward trend. That's why you see that after it's reached there, it started coming down into our take profits. And we took our profit. So when I hope you have understood what we call a break of structure now. Let me see if somebody has understood what a break of structure is. Even if it's just one person, let me see from the chart. Is there someone that has understood what a break of structure is? So when you say sharp, when you recognize a sharp move in a coin, okay, either is a sharp move upwards or a sharp move downwards. What you want to see there is for it to have a break of structure. So the break of structure, did it break it to the upside or it broke it to the downside? That will let you know which side you'll be taking on the trade. Either you're going long or you're going short. So after you spot the break of structure, yeah, I asked, has anyone understood break of structure? I say, my co-host, hey, I want to move on. Is my co-host there? There are chats in the there are messages in the chat. So okay. Someone said I should come again. Uh okay, hold on. Let me share my screen again. Okay. Pardon me. Sorry for the breaks, friends. So said I should come again. Okay. On the break of structure. Oh, somebody's late. Okay, I see. You are going to catch up. Don't worry. You're going to catch up in the recorded version. Charles, I got you. You are welcome, Charles from UK. So what I explained is that when you want to analyze a coin and you come on the chart like this, okay, I was on the 15 minutes time frame when I was analyzing this coin. Okay, so you come on the chart like this, what you want to see is a sharp move to either the upside or the downward side. An aggressive move. Aggressive moves like this. You can see like this one here. This aggressive movement. You can see that it's created some green candles. These blue ones. You see 1, 2, 3, 4, 5. Those 5 candles, they are aggressive candles. You can see that their candles are thick and they are aggressive. They didn't, no black was within them. So those are the kind of candles you look for. An aggressive move to either the upside or the downward side. So I came on the chart and I saw this move. I saw that the coin was on an upward trend. You can see from here, the coin has been trending upwards, going upwards. You can see going upwards to this level, going upward. Then it went up to this level. It created a support. It created a resistance. It resisted that. Resisted that price. It could no longer go past the price. That's why it's considered as a resistance. So then after then it dropped sharply to the downward side. You can see this sharp move to the downward side. These black candles. You can see them from this upper side coming down, coming down, coming down. So when you see such candles, and then you see that it has broken a structure, like this one now, like these blue ones now, they are such candles that we are talking about. Okay, like this blue now, they are such candles that we are talking about. But the reason why we could not take a trade, there are reasons why we could not take a trade in them. Okay, because not just one confluence that we see in the setup that make us trade it. We have to see some other factors to be able to regard it as a signal. So such moves are what we need. Moves like this blue, you can see them, see the movements. These are the types of movements that we need. When you see them, and then let's assume this blue, after we saw it like this, then the coin now came down like this, created a black, and got, let's assume it got to this level, and then it started going back upwards, and it broke this previous high. It broke this previous high, this support line. If it broke it to the upside, then we can start looking for buying opportunities. But when after the high, after it retraced downwards, it continued to break the previous low, the previous highest low. This is an higher low, higher low. In a candle, we always have the high of the candle and we always have the low of a candle. Let me click on this candle now. This candle, this black at the top here. Look at this candle now, this black one now. There's a dotted line on it. So that means this is the candle that I have highlighted, this candle. A candle will have the high. Okay, like this black candle now, this is the high. And this is the low. Now it has a opening price. Being a black candle, that means it opened from the top here and it closed under. Okay, the price started from here and then maybe it went upwards and it went downwards again to this level and then it pushed back up to close here. That's why it's considered a bearish candle. That's why the candle is black. So it means that it is a bearish candle. So it has an high here and it has a low here. So as a candle has a low, sets of candles also have their highs and their lows. Okay, these are set of candles. You can see that these are two blue candles. These are several black candles. These are three candles. These are some blue mixed with some black. So as they are forming beside themselves, they be creating highs and lows, apart from the single high and the single low on a single candle. There is the highs of the set of candles. Now, you can see this set of candles, these two. Now, it started from here, obviously. Each candles are 15 minutes because we're on the 15 minutes time frame. So now, this is a 15 minutes candle. So it's started from here, went down. No, it started from here and it went down, it went up, pushed back down, and it's closed here. Then another candle started here. It came down, went up to this level, then came back down, and it's closed at this level. So it made it a set of candle. Now, it could have continued going up, but it didn't continue to go up. You see that the next candle gave us a red candle coming on the way down. Those black candles are what I'm calling red candles, and the blue ones are what I'm calling green candle. Red is for downward, and green is for upward. So in my chart here, I decided to use blue and black. So blue is for upward, and black is for downwardness. So these two candles now, this is their low, and this is their high. Okay? So now, after it's reached there, the price pushed back down to this level. And then the price broke again, started going up again. This was the low before. Now it created a new low of a new set of candles. Okay. Now these black candles as well, they are set of candles. Okay. They created a new high. They created a high here. Okay. Now they came down. They started going up again, created a new low. But this low is now higher than this low, which makes it a higher low. It makes this one a higher low. This one has been considered a higher low because the low is a low of the candle, but it is higher. It's closed higher than this previous low. That's why it's considered a higher low. So we'll be spotting the higher highs, higher lows, lower highs, and lower lows. That is what we work with when we read price action. So now it came up here. Okay, so we couldn't have traded this because it broke it. It broke this highest low that the trend has created, the uptrend. It broke this highest low that the uptrend has created, the uptrend. So this was it reached there, then it came down this low. So it broke the highest low that the coin has created. And then it created a new high and it started coming down. Then it broke that highest low, created a break of structure, okay, to the downward side. So as it created that break of structure, we'll start to look at selling opportunities because you trade with the trend. The coin is going down you trade that is going to go down. If the coin is going up, you trade that is going to go up. That's how to follow the trend. So I started my analysis when I have seen these ones. I have seen that the coins was going up, and then it's reached the top here. It could no longer go up. It started coming down, created a sharp move to the downside. So this sharp move to the downside is your jackpot. Are you with me? This sharp move to the downside is your jackpot. That is what you work with. If it was a sharp move to the upside, you work with it as well. But it was a sharp move to the downside. So the first thing you want to see in that sharp move is a break of structure. So we had our break of structure present here. Okay, so after spotting a break of structure, you need to spot an order block. Okay, after spotting a break of structure, you need to spot an order block. Okay. This is 15 minutes. Let me see. 5 minutes. I hope you have understood break of structure. I hope you have understood break of structure. I hope you have understood. Samink and Bentley in yoga. Have you understood what a break of structure is? Have you understood? I have repeated it. And I tried to simplify it enough for you people to really understand. Oh, great, 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 great. I'm happy for that. I'm happy that you now understand. So when I saw that, after seeing that, the next thing for you to look out for, after seeing a break of structure, after seeing your sharp move, the first thing is the sharp move. And after the sharp move, you observe a break of structure. So after seeing a break of structure, the next thing you want to see is to see something that we call an order block. What is an order block? The order block is the first candle that led to the impulse move. Okay, the order block is the first candle. We can see that these candles are black candles. So they started moving downwards sharply. Now, to spot an order block on this 15 minutes time frame, the candle that led to the sharp move, the first one is this black candle. I hope you can see this black candle right here. This candle here. You see that it created a blue candle, which means this candle was bullish, was on the way up. So it started coming down from this black candle. That's why the candle is black. So it's the start of the sharp movement. So it is considered as an order block. From the high of the coin to the low, from the highest point of the coin to the lowest point of the coin is considered an order block. Why is it called an order block? You see the big banks and institutions, the big players, those people that we are trading against, the market makers, okay, the big whales that we are trading with, all these BlackRock, all those rich people that are in crypto. This first candle that creates a sharp movement signifies where they have placed their order. Now, when they order, for you to see such candles as this, it means that there is a pressure in that coin, a full force in that coin. Now, this full force, there are some people that caused it. They put their money or they remove their money from the coin. And that is why the coin has either moved up or moved down. Now, this coin, they removed their money from the coin. Whenever you see a coin go up, people have put their money in the coin from here. And that's why the price is going up. And whenever you see that a coin goes down as well, it means that people that are holding the coin, the people that have the coin on their wallets, they have sold the coin. They sold the coin. And that is why you see that the price of the coin will start going down because people are sold. So people buy and sell for different reasons. There are people that are called the market manipulators. Those people, when they either put in their money to the trade or they remove their money to the trade, it makes a big effect in the markets, in the general market. So it affects a lot of people because the amount of coin that they have in that trade is so much. Okay, the amount of coin that they have in the trade is so much. So if they remove their money, the whole world will know that somebody has removed their money from this coin. Or if they put in their money, the whole world will know that some people have put in their money. For you to trade at the bottom here and you are taking profits at the top, it means that some people like you, they have put in their money in the coin. And that is what is pushing the price of the coin upwards. So I'm explaining what the order block is. I'm explaining what the order block is. I hope I'm making sense. I don't want to rush the meeting. I would have loved to rush it, but I found out that it won't work if I'm rushing you guys. To not work. So we have to go slowly. Okay, just like this. Don't let's rush. Wherever we stop today, we continue from there tomorrow or next tomorrow. So when you see a sharp move like this, it means that the market makers, the manipulators, they are in that market. So you mark out what caused the sharp movement from the last candle that moved up or down. This is a downward movement. So you mark the first candle that led to the downward movement. So it is not this one, because this one is the other color, is the opposing color. So you mark the first one in the same color of that movement that you have seen. If the movement that you see on your chart, if it is a red movement, you mark the first red coin, the first red candle. Okay. And if what you have seen, if the sharp movement that you have seen is an upward movement, if it is green, if it is a green candle, if it is set of green candles that has moved up sharply, you mark the first candle. What? Is my line breaking? Is my line breaking? I could. I notice it's like I'm not seeing my network not stable. Please let me know, please, because this meeting is recorded. I wouldn't want to fumble. If my line is breaking, my co-host, please let me know, or anyone in the chats, please, so that I can adjust as soon as possible. So, if it was a green candle that has made an impulsive move to the upside, the first green candle will be considered as your order block. So from the high of the coin to the low of the coin will be marked out as your order block. I hope you have understand what an order block is. So I have explained two things now. I know I have explained two. I have explained what a break of structure is. Three things. I have explained how to identify a trend, how you know if it's an upward trend or a downward trend. I've explained what a high means, what a low means, what an higher high means, what a lower low means. Okay, I've explained all these things. I've explained to you what a break of structure is. And now I have explained what an order block is. Let me see if there are some people that understand what an order block is before I move on to explain the next thing you must see in your charts. Let me see. Are there people that has understood what another block is? Or if you haven't understood, please let me know so that I can repeat myself. Guys, I'm waiting for your feedback. Let me know if you have understood. I'm simplifying this for you people to understand. Okay, I see Sammy and Benny. Is there anybody that doesn't understand? I see that these people have understood. Is there anybody that doesn't understand so that I can maybe repeat myself before I move on? Please signify in the chat, or you can unmute and let me know, please, because we are moving on to a crucial part. Okay. Yes, this is impressive. I see 1, 2, 3, 4. I see four responses that I should proceed to. Okay. Okay. So the first thing, you must spot a sharp movement to either the upside or the downward side. The second thing, you must spot a break of structure. Then next, you must see an order block. An order block. Let me share my screen again. So in that case, so we use the rectangle tool. For those that know how to use the trading view already, you use your rectangle tool, you mark out this other the other block. Here is the other block here on the 15 minutes time frame. So whatever you see on the 15 minutes time frame, you go down on the lower time frame to confirm it, to see if it is present. If it is present there, that means it is valid. If it is not, then it is not valid. So we've seen an order block here. Okay, we've seen another block here. Then, okay, this is another block. Let me name it other block. Okay, that is another block. Okay, let me remove all the other stuffs on the, so that you people will easily understand. All the stuffs we have done before, I'll remove them now. So we've seen that other block. Okay, we've seen the other block. Now, the next thing for us to see, after we've spotted an order block, is a fair value gap. Fair value gap. Somebody say fair value gap. Somebody say fair value. Okay. Fair value gap. So, what is a fair value gap? What is a fair value gap? Oh, let me. Call it a fair value gap. Okay. So, a fair value gap. Oh, I hope you can see a fair value gap. For those that are noting it down, fair value gap. Okay, so here is it. So you need to see a fair value gap in that chart after you have seen an order block. So what is a fair value gap? A fair value gap is a candle. When you want to spot a fair value gap, first thing that you must see are 3 consecutive candles. 3 candles that are moving in the same directions. So after you spot an order block, you look for a fair value gap. So 3 candles, minimum of 3 candles in the same directions. So from here now, we can see that we have in the same direction an impulsive move. We have how many candles? 1, 2, 3, 4. We have 4 candles in the same direction. We only needed 3 candles to have a valid fair value gap. If these candles were 3, if the candles were 3 and not 4, like this, if this one was not there, if it was just these 3, then this small one here would be looked into. We'll be looking to have a fair value gap in this small one. Okay, but this is not valid as a fair value gap. Even if it is just these 3 that we have, we couldn't have considered this as a fair value gap. Why? Is because for a fair value gap, there must be a gap in that candle. The candle must create a gap between the previous candle. Okay, I'm explaining what a fair value gap is. The candle must create a gap within the previous candle, which is the order block, and the next candle above it, above or below it. It is an upward trend like this one now. You see, when you say you have another block, you consider this first one as another block. So you can't have a fair value gap because there's a black candle in the middle. If it was 3 consecutive candles, then you could have considered this as, you would have been looking to see a fair value gap in this middle candle. But we can't have a fair value gap in this. That's because of this middle candle that is another color. So there was no gap in this candle at the middle. If these black candles were 3, there is no gap in their middle. Why did I say there is no gap in their middle? Let me show you. This is what we mean by gap. Here was the opening of the coin. Right here was the opening of the coin. Then it went down to this place. Up, it went down to this place. Then it went back up to this place, created a high there, and it pushed back down, and it's closed here, under here. So the body of the candle, when you are spotting a fair value gap, you spot it using the body of the candle. Okay, in a fair value gap, the body of the candle is what you use. When you are marking your order block, you use both the body of the candle and the wicks. You can see that here is the body of the candle here. But you can see that this and this, they are just wicks. But it's another block. So you mark from the top to the bottom as your order block. But when you are marking a fair value gap, you don't mark from the top to the bottom. You mark only the body of the candle. So where's the body of this small candle? If it was just 3 candles that we had here, here is the body of the candle here. So to consider it a fair value gap, the previous candle and the next candle must not meet at the middle of this of the at the body of this fair value gap. What I mean is that you can see that this candle, the order block, it has created a high, a low that has closed. The low was already below, it was already equal to the body of this that we want to see a fair value gap in. So it has cleared out the body of the fair value gap, which has invalidated this candle as a fair value gap automatically. I hope you are getting this. It has invalidated this candle as a fair value gap. For a valid fair value gap, there must be the gap. Okay, there must be the gap. That candle must be respected. No candles coming from front or back must have his body or his wick around the body of that candle. Okay, if it was this other side that we are considering, it is good, because you can see that here's the low of here's the high of this long candle. You see, it's only reached here. So there were still some bodies for this candle. So we could have considered it a fair value gap if this other block candle, if it hasn't, picked up the body of the candle at this side. So both sides must have a gap. I hope you are getting this. They must give it a gap. Both sides must be given gaps. Both sides will be given gap. So we couldn't have considered it a fair value gap if this candle was 3. If the candle was 3, we couldn't have considered it a fair value gap because it's not qualified. So luckily, we had it as 4 candles. We had it as 4 candles, not 3 in this case. Here's another candle at the top here, making it 4. So fair value gap could be in the middle or at the top. Just that there must be a candle before it and after it. Like a king or a queen. When a queen is walking in the village, there will be people that shipmates her. People that will go. There will be some at the right side, some at the left side, so that dangers will not touch her. Okay, so there must be a candle at the upside, at the left side and at the right side. Candle in the same color. The candle must be the same color as the one you want to consider as the fair value gap. Okay, so now we have seen is a 4 sets of candles, okay, that are in the same color. We have the order block here. So we can't consider this as a fair value gap. We move on to the next candle. Now you can see that the low of this candle okay. The low of this candle only reached here. It's only cut off this side of this candle that we want to find a fair value gap in. Then the other one as well, the high of the candle only cut off this side of the candle we want to use as our fair value gap. We can see that we have a gap at the middle of that candle that has not been touched. I hope you understand what the fair value gap is. Let me know if you understand what the fair value gap is. So let me know if you understand what the fair value gap is so we can move on. So I've explained how to know a trend, how to identify the trend, how to see your highs and your lows. I've explained how to spot an opportunity. You need to see a sharp movement to either the upside or the downside, and you need to see a break of structure. I've explained what a break of structure is. I've explained what a break of structure is. And also I've explained what an order block is. And also I've explained what a fair value gap is. Okay, let me check the charts. People have understood. People are really grabbing this thing. Oh, wow, I'm very happy. So there's nobody that is not getting it. Everyone here in this meeting, they are understanding this. Is this true? Everyone is understanding. Is there nobody that is not understanding? Please signify now. We are about to close the meeting. Let me know before I move on. Okay, let's move on. I see everyone is understanding. So the next thing after you spot a fair value gap. So after we got the order block, this candle here will be considered as our fair value gap. This black candle. This is our break of structure. Okay. So this black candle is our fair value gap. So we mark it with a rectangle too. From where, when you are marking, make sure you clear out those places that has been cleared out. Make sure you don't mark them. So you see, this black candle has cleared out that place, and then this black candle at the downside has cleared out just this place. Can you see? So now this will be our fair value gap, FPG. Can you see? So that's, we have gotten an order block and we have gotten a fair value gap. We have gotten an order block and we have gotten a fair value. Yes, so after getting that, the next thing is to confirm if these fair value gaps and the order blocks, if they are valid, all the break of structures, we start from the break of structure, the order block, the fair value gap. So how do you confirm? You look for it in another time frame, maybe a higher time frame or a lower time frame. So this is 15 minutes. You click, you check 5 minutes. So after 15 minutes, you check 5 minutes. So we come there where we have marked out. We want to see if we can have the same thing that we saw on that we have marked, these things that we marked on the 15 minutes. We marked a break of structure. We marked an order block, and we marked an FVG, our fair value gap. So we want to be able to see that same thing on another time frame. So we are on the 5 minutes time frame looking for that same setup. Okay, so you come there. Here is it. So we can see that we have a break of structure. You can see the break of structure here. There's the break of structure here. So we have the candles that led to the break of structure. The first candle will be considered as the order block. The first candle will be considered as the order block. So on this time frame, 5 minutes, we'll mark this first candle as our order block. The high, from the high to the low of the coin, you mark it through as your order block. So you name it as order block. So we have an order block on the 15 minutes time frame. Then we have another order block on the 5 minutes time frame. So order block logged in, we need a fair value gap. Okay, we need a candle that is not touched by the, so we can see that here on the 5 minutes time frame, we have multiple candles that are in the same color. So it started from here. Oh, that wasn't the order block. The order block is here. The order block is this first candle. This first candle that led to the has cleared the order block on 15 minutes time frame. The meeting is about to come to an end though, but we'll try as much as possible to make it repetitive. The point is for you people to understand. So here's the other block here in this time frame. The first can be in the same color that led to the impulsive movement. That's the other block. So another block here. So now on the 5 minutes time frame, back there on the 5 minutes time frame, I'm back to the 5 minutes time frame. So I'm looking for a fair value gap. Okay. So now we have multiple candles here in the same color. Starting from here. Starting from here. The one I marked before was this one. No, it's not the order block. This is the right order block, this one. Because there was a blue candle and then there was this black candle. And this single black candle, this doji, is what's created all these black candles. So this makes it our order block. That is where the smart money, smart guys, that's where they are placing their order. That's why you see that the coin has pushed down with a lot of aggression. So order block is where the big institutions, the big banks, the whales, the manipulators, order block is where they are placing their order. They place their order in blocks. When they want to trade, they don't trade like us that will buy small. They buy a lot of, you hear that one person has bought crypto again. They have bought 54 million watts, $54 million of the coin. They have bought $100 million of the coin. Those are the people that create all these types of candles. Okay, those are the people that create all this kind of candles. So that is our order block. We got another block on the 5 minutes time frame. So we mark the order block. This one that I called order block before is not an order block. So I want to move it. I can't move it. Let me just put another one just for you to understand. Here is where I'm supposed to put the order block. Right here on this candle, from the high to the low, like this. So here's the order block. So that is the order block right there on the 5 minutes time frame. That's the order block. So after the order block, we need a fair value gap. So fair value gap is a candle after the order block. It could be directly after the order block or few candles after the order block. But the point is, the candle must be respected. There must be no touches. There must be no, rubbing. No candles must be rubbing body with the candle. So from this candle is where we are going to find the fair value gap. So we would see that we have how many candles? Okay. We have 1, 2, 3, 4, 5, 6, 7, 8 candles. We have 8 candles there. So there's a tool that we use when you want to pick a valid fair value gap. You could pick any. Definitely, it can't be this first candle because that first candle is the order block. That can't be our fair value gap. And you know that it cannot be the last candle because it must be in the middle of candles. So it can't be the first, it can't be the last as our fair value gap. So we are looking into all these ones at the middle to find a fair value gap. So any of these ones from here to here, we are looking to have a fair value gap in them. But when you are checking your fair value gap, some things you have to put in consideration. You have already known no candle must be rubbing body with it. Then another thing for you to take away is that a good fair value gap forms closer to the order block. It must be the one that is the nearest one to the leg down that cause the break of structure. Okay, so it must be nearer to the order block. So because there's a tool that we use to see which is the most valid fair value gap. If I would use the tool, let me not go there, but if I use it, the tool is going to extend. It's going to create a box from the low of the coins of the candles that I'm reading to the high of the candle. It's going to create a box like this. Then it's going to create like a middle. It creates like 3 lines. 1, 2, 3. So it will tell you that the best fair value gap to use is the ones that are from this middle line upwards like this. Use any of them as your fair value gap. Anyone from here to here is not good to be used. So if you extend that tool on your charts, you'll be able to, but you can see with your bare eyes that if you halve these candles into 2, if you say this is the half of it, that these ones are closer to the other block, these ones are far to the other. So you can't use any of these ones. You have to look for a fair value gap in one of these ones that are closer to the other block. So, which is the and another characteristic of a good fair value gap is that the candle must be big. The candle must be big. It mustn't be just a small candle. It must be like a long candle. You can say this one is long, this one is long, this one is long. So when you have such long candles like this, you can't expect to have your fair value gap in a small candles like this because they are already big candles. So the fair value gap must fall within the big candles. So you want to check, make sure you check for a bigger one. A bigger one. So you automatically know you can't pick from this line. From this line. So your fair value gap will be in between this 1 and 2. So it's now your choice to choose which one is best. I've told you it's good to use a fair value gap that is nearer to the other block. So here, this one could be considered as a fair value gap, and this as well could be considered as a fair value gap. So we are trying to confirm what we have seen on the 15 minutes time frame and make sure it's here on the. So we have gotten what we want. We got a break of structure. We got our break of structure here. We got our order block, and then we got our fair value gaps. We even have 2 fair value gaps to use, so you can choose any of them. I prefer to use the one that is closer to the order block. So what do you need these order blocks and fair value gaps for? You'll be like, are we coming to build a house here? Are we bricklayers? Why are we laying blocks? Why are we filling gaps? Are we, are we bricklayers? No, we are not bricklayers. We are traders. Okay. So what you use the order block and the fair value gaps for is wait for a retracement back into the middle line of your fair value gap. So if you say we have a fair value gap here, this one you are seeing, this big fair value gap you are seeing is the one we marked out on the 15 minutes time frame. You see, the one we marked out on the 15 minutes time frame is what you are seeing on the 5 minutes time frame. This big fair value gap that will map out here. So that is what you are seeing on the 5 minutes time frame. So is the one you are seeing on the 5 minutes time frame. So here, so we mark out our fair value gap on this 5 minutes time frame. So you pick your tool like this. I want to use the one closer to the order block. So here, like this, my fair value gap is picked. Make sure it doesn't touch the other coin, other candle. So I give it a name as my fair value gap. Okay, so that's my fair value gap. So why do you create these order blocks and fair value gaps? So now you have confirmed it both on 15 minutes and on 5 minutes. Those confluences, those things that we confirm now, they are what we call confluences. Confluences. So you want to see those confluences in a setup. That is when you consider it a signal. So what do you need the order block and the FEG for? So what do you need an order block and an FEG for? You see that the coin has pushed downwards. So we need a retracement. We need the coin to go back and touch the middle of the fair value gap, or for it to touch the order block. I prefer to have it touch the order block. That is more valid. Okay, it's more valid when it touches the order block. But if it touches the middle of your fair value gap, is an entry. You enter the coin. So you enter the coin, you place your stop loss above the recent swing high. Here is the recent swing high here. So right here is where you place your stop loss, just right above the order block. You place your stop loss there. Okay. And then, okay. Yeah, here's our recent swing high right here. Just above the order block is our recent swing high. So you place your stop loss there at the recent swing high. You place your entry at either the middle of the fair value gap or on top or below the fair value gap, just right at the fair value gap. I mean the order block. Either the middle of the fair value gap or the touch of the order block. You place your entry there and you place your take profits. Now you are looking, where do I take profits? You take profits at the most recent low. The most recent, because you can see that the coin was going up, creating an higher low. So the most recent low that is nearer to your entry, that is where you place your take profits. Okay, so you check. If you can't see it clearly on the, because it's not clear here on the 15 minutes time frame, then you go down on the 5 minutes time frame. Normally, when I check my coins on the 15 minutes time frame, I must go down. I just do my analysis on the 15 minutes time frame. When I want to make an entry, I make my entry on the 5 minutes or on the 3 minutes. Sometimes on the 1 minute, I can be so stubborn like that. I go on the 1 minute to make my entry to confirm that I have a good entry. Okay. So it's good on the 5 minutes. We can see everything is clear over there. So you use this tool to set your, like this, to place this in the middle of the fair value gap here, or just at the other block here, whichever one is good. So because the fair value gap is nearer, is very nearer to the other block, I place the entry. I placed our entry. Can you hear me, guys? Can you hear me? Okay. So I placed the entry at the middle of the fair value gap here. So expecting the coin to retrace. You can see the coin retracing backward, retracing back to the upper side like this. You can see it going up like that. So we expect when it touches the middle of this fair value gap, that's when we take our entry. Our stop loss is set at the recent swing high, and our take profit is set like the 2 times of our stop loss. So if you measure your stop loss and your stop loss says it is 1.5%, 1.5, then your take profit must be 2 times of this 1.5, making 3%. 3%. Or you check for other stuffs that will give you a better take profits ratio. So for me, when I checked the take profits, I saw that the coin was going to come here after it touches our entry here. I knew that the coin will come up here. Around where is it? Okay, here. I knew that the coin will come here. So I place my take profits here. So my entry is here and my stop loss is here. So here is it. When I place the tool on it, you can see the entry tool here. Here's the entry tool at the middle here. When you place it there, it's going to open a short position. So my stop loss is here. My stop loss was there, around here. I put my stop loss around here. It was around 8%, my stop loss. Then I put my take profits around here, somewhere around here. That's where I put my take profits. Somewhere around here. I set my take profits to be around here. Yes, or if I moved this to the other block there, so I placed my stop loss just So that my stop loss was just above the order block here. Then I had my take profits as this side. This side. Somewhere around there was my take profit. So my take profit was around 10% to 12%. Is it? So, and then we see the coin after we entered, it peaked our entry here. Right here was where it peaked our entry. It came down and it dropped on the in the middle of the fair value gap. And my robot picked the trade from that point. It bought for me because I have set a preset. When we see such signal, you set a preset price. I'm going to teach in the coming sessions how to set preset price. So when you put these two here, we show you your stop loss. Okay, it will show you your stop loss amount. You can see stop at the top here. This one here. That's the stop loss. So this red here, that's the amount you put when you are setting up your royalq. You put this amount as your stop loss amount. That's what you set. So if we hit that amount, this side, if the candles go down and they touch this side, then you lose this percentage of your capital. But if it goes in your favor, here's our entry at the middle here. This one here is our so okay, so this blue here is our entry. This blue here is our entry. Is what you put as your entry price. Then this green is your take profit ratio. Here, that's your take profit. So those are what you use to set the trade in your robot. You set this price as your preset price, where the robot will enter the trade for you. Set this at the stop loss, and you set this as the take profit amount. And we could see after we entered the coin yesterday, it's peaked into the entry, and we see after some few struggles. Okay, after a few struggles, we could see the coin hits our take profits right at this side. This side, can you see? So we entered here, entered the coin here, entered here, and then it went down, touched the order block. So if you had placed your entry at the middle of this fair value gap, or you have placed this at the beginning of the order block, you see that it will still touch the two places. But me that entered at the fair value gap, the coin first went up, went down, sold for me here. I collected 3%. It went down again. I entered. I collected another percentage. It went down again, touched the order block. If you had placed your entry at the order block, I have already taken around 5%. You are just coming in at the order block. But anyways, if you come in, you still have, because the order block is the entry, you still have more than 10% profit to take, but I have already logged in 5% before I start again to take the 10% because it has not reached our TP. So it went down to touch the entry price, then it started coming down again. You can see it came down here, spit some stupid money, went down again, came back up, spit some stupid money, went down again, came back up, spit money, went down again, came back up, spit money, went down, came back, went down. So as it was going down, coming back up, I was busy taking profit. I took the profit until it got to around there. I didn't even take the profit up to the 10% though. I got tired of taking profits. So I only took it to like around here. It was somewhere around there when I stopped trading. It hasn't reached this place at all. So from the single coin, I made $247 yesterday. $247 for yesterday alone. We have already run past our scheduled timing. We are supposed to finish in 7 p.m. on dots. And this is a 7:12 already. Oh. My royalq is not opening. I think that was where the screenshot stopped. My phone is low. Phone is hot. Okay, let me restart the phone. Let me just restart it. So with that trade, I only used I used not up to $300. The capital I used was not up to $300, and I made $247 profit in that coin yesterday. $247 profit with a capital not up to $300. Don't have much capital, but I use proper risk management. I can't put all my capital into trade at once, so I only use small portion of my capital. So the total capital I used to get that profit was not up to $300. As I was entering the trade, going back out, entering, going back out, it was not up to. I never used more than 300. I never used up to $300 during those times when I was trading that coin yesterday. So because if I use $200, that means I already have $2,000 in the trade. So I was using leverage and I was able to make profit. I was able to make good profit because of my leverage. So I just want to show you. I want to share my screen so that you can see my profits for yesterday. And then we can see if we have few questions, we answer them, and we'll close the meeting for today. We continue on another day. So if we close the meeting for today, we are going to be starting the next session. We are going to be starting from how to set a strategy. Now I have taught you how you can get a signal, how you can get a signal by yourself. It's not stopping at that. You haven't understood everything already. Just, this is just like the beginning. So there's still more to it for you to understand because all setups will not be the same. The same thing you saw in this setup now, it might be another thing you see in another setup. So whatever you see in that setup, you must know how to interpret it as well. So I have shown you how to interpret this kind of setups. If you find it in a coin, that is what I used for the signal I posted yesterday, like I told you. So let me share my screen again. Let me share my screen again. Okay, and as I share my screen to show you my profits, if anybody have a question, please ask your question. Okay, I see you are asking how to set the first buying amount according to your capital size. We ran out of time already, but I'll just give you a brief explanation. Hold on. So,
Yeah, hello. Hello,
yes,
Victor.
yes,
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 I have been following keenly, but I realized that, especially we, the beginners, it will be very difficult. It's been very difficult for us to get it through as quickly as possible. And as I've been saying, the dynamics and analysis of the trade itself is another technique on its own. And it's not everybody who can put those techniques as early as possible. Yet, trade must go on. So I always say that for now, some people like myself will be picking the signals and replacing it as such, instead of we learning how to decode the techniques and the technicalities in the reading of the charts. What do you think? Hello?
yes.
You understand what I'm saying?
Oh, yes, I get you.
Yeah, because
Thank you.
what you just did like this, yes, it has even confused me the more, but I must listen because yes, I might be confused because I'm not good at it. Some people on the call might be okay with it, but some of us that are beginners, we don't really get that technicalities, how you are decoding and analyzing it. But then the end result is the signal that will come out of the analysis. So if you drop us the signals, I might proceed without getting to know the technicalities resulted in the signal, whether being positive or negative. But then we must go in like that until sometime that the clarity is being, you understand?
Yes, yes, thank you. Thank you so much for the suggestion. That is nice. Okay. What you said, okay, is good. And the reason why I teach this, I know personally that most people will not understand it at once. Okay. I dropped the signal to the group so that everybody would trade yesterday. Right? I knew that most people do not understand the confluences and how to get the setups in the coin. Yet, I dropped it as a signal for everyone to trade. Okay, I dropped it as a signal for everyone. So it will always be like that. When I see a signal, I'm not going to wait until you understand how to read the coin. I hope I'm loud and clear. Hello? Am I still in the meeting? Can somebody hear me?
Yes, I can hear you. Go
Okay,
ahead.
great, great. So I send the signal knowing that you people don't know how to pick the signals yet, but because I have found it as a signal, then that is why I'm sending it to everybody to trade. So I always send it that way. Whenever I find a signal, I'll send it. I personally, I don't trade all the time. Not all the time that I trade. It's until I find my confluences in a setup. That is when I take the trade. And when I pick my trade, I take it aggressively. I don't joke with it. So I will always send the signals. I will always send the signals. Just that they won't come like before when we just enter a signal anyhow. Because now you have to, there are conferences that you must see in the setup for you to say, okay, this is a signal we can trade. Because when I drop such signals, they are good, they are fire. They will surely go as predicted. And if it doesn't go as predicted, it's the stop loss. We just lose a little amount. Okay, instead of staying in a floating loss in spot market, where you can stay in floating loss for like 5 months, for like
Yeah,
8 months.
I've been in one for almost 8 months now.
Yeah, that's how it works. So, and then when it finally delivers, maybe you just make maybe $2, maybe $5 from the trade. Imagine you
That
staying in a trade for
does it make
8 months.
that is another critical thing about this trading thing, that you'll
Yeah.
be in floating for more than months, and at the
Yes.
end of the day, you'll be sold at some 2, 3, 4%, and that's it. So
Yes.
putting
Yeah.
about huge money into there and getting only 2, 3% for 8 months. Even that one cry, if you are lucky, that you might get that. Otherwise, sometimes you can even when the float get closer, you might even be tempted to close it and move on, because you might not even make anything out of it at all.
Yeah. I get it. So that is why we prefer these futures, because you'll be able to set stop loss. So if it hits your stop loss, you just lose a little amount. You lose a
Then you
little
move
amount
on.
instead of, then you move on. Yes, you move on. You know, definitely, whenever we trade my signals and then it goes against us, since I've been using these conferences to pick my signals, none has ever hit my stop loss. Okay. None has ever hit my stop loss since I've been using them up to yesterday. None has ever hit my stop loss. Okay. So if you observe what you need to observe and you stay calm, you don't rush, you be in a controlled state of mind, you have to discipline yourself, have the right mindset before you go into a trade. I always tell people, you don't rush
Definitely,
into a trade. You don't have
definitely,
fear of missing out. You don't say because some people are making profits, you also want to jump on the coin and make profits. No, wait for your time. Wait
definitely.
to
So
have the proper setup. When you have the proper setup, then you go hard on it. You make your profit. So I made close to 100% of my capital yesterday as profits. As profits. So
an-
let
anyway,
me yeah. Let me show my profits, then I can answer the other questions. Then we can close the meeting. I want to show.
there has been a signal posted today on the signal. I don't know, on the signal page.
Okay.
That I think is a future signal. H
Yeah.
H H HFT USDT
Yeah.
direction shots. Take
Yeah.
profit percent. Leverage five times to 10 times leverage. Entry camp. So what does such a signal means?
Okay.
Did you get it?
Yes. Hold on.
If you go to the signal page, you'll see it HFT USDT direction shots. Take profit 1%, leverage 5x to 10x, entry something. Then it's a buy in call 0, open margin call, strategy mode, stop in real time settlement.
Okay. Those are the strategy settings to be able to trade the coin. These are what I would like to treat on the next session we have, because if I have to get into it now, when I explain, I always make my explanation in full details so that you really understand. So I don't want to get into margin configuration. I've been seeing questions in the charts. People are asking for how to set first buying amounts. If I say I should start explaining, we have used past the 2 hours that we are supposed to use already. We are now 26 minutes above 2 hours. My people. We can have a meeting tomorrow, if you don't mind, but I'll see which of the questions I can just rush to answer now. Let me see. Yeah. I'll see which of the questions I can rush to answer. So, before I answer, like I said, you can see the profits here. Not so much I've been making on the account. I've been using the account to trade, so, but you can see just yesterday alone that I got my proper setup in the coin, because I don't rush to trade every day. I don't trade. I'm not a fan of trading every day. Yeah, I used to do that before, but I don't do that no more. So I trade once in a while. When I get my proper setup, that's when I trade. So for yesterday, you see $247. Here is the futures. See? So I think it was the only coin I traded yesterday. You can see it was the only coin, Fund USDT. The first time I made $1.9. Then I made $2. When I entered again, I made $41. I entered again, I made $25. I entered again, I made 0.4. I made 0.6. Oh, I think these are sub margins because I was buying on subbing rate time settlement. So it was selling all the subbing modes. And then $1.4. Then I made this big one, $102 profit. And another $6.4 and another $11, $21, then another $27. Right? So that is how I made the whole 147 for yesterday. You can see very easy, clean, and clear profits made. So yeah, let me see the questions. Yeah. Okay. I see Samin says, please take the profits. Can you explain that one again? I was not seeing your screen. Oh, take profits. You mean the take profits? The take profits. Okay, when you find I hope everyone is doing fine. I hope everyone is fine. Because we have now used past our time. I hope everyone is okay with it. Please, I hope you are okay with it, friends. Okay. So, Samink, let me answer your question. You take profits right here. Okay, let me delete this. So now we have said the coin must come back to touch the middle of this fair value gap, either the middle of this fair value gap or the beginning of this order block, anywhere around this order block. The candle must come back to touch it. Once it touches it, you already have your entry. If you say you want to place it at the middle of this fair value gap, okay, you want to place your entry at the middle of the fair value gap, your stop loss must be above this fair value gap or at the recent swing high. That was the recent high that the coin produced before it started coming back down. So if we look at the coin, here, hello, are you hearing me? Hello, are you hearing me? Network is getting poorer and poorer because it is raining heavily now.
We
There's
can
a
hear
heavy
you, sir.
downpour. Oh, okay, great. Thank you, Delight.
You're
So,
welcome.
so you place your entry at either the middle of the fair value gap or at the order block. Okay, anywhere around this order block or the middle of this fair value gap will be your entry on the 5 minutes time frame. You have analyzed on the 15 minutes time frame. Now you look for the entry on the 5 minutes time frame. If you analyze on the 1 hour time frame, you confirm on the 15 minutes time frame and you look for the entry on the 5 minutes time frame. So this is 5 minute time frame. So if you place your stop loss here or here at the recent swing high, your take profits must be 2 times of your stop loss. Let's say your stop loss is 5%. So your take profits must be 10%. Are you getting it? If your stop loss is 5%, your take profits must be 10%. That's a risk to reward ratio. So that is it about the take profits. That is how you calculate your take profit. So if you put the two, we have a tool to calculate your take profits for either long or short. So if you want to go long, you want to trade long, this is the tool that you use. This tool here is for long. You can see an arrow that points to the upper side. That dotted arrow that points to the upper side. It means you want to go long. And if you want to go short, you use this other one here that points to the downside. So this is a short signal. We have gotten our signal, the short signal. So the next thing is for you to click on this, and then you place it on it to see, for you to show you your stop loss amounts, your take profit amounts, and your entry price. So I'm going to place it at the middle of the field. You know, see, here is it moving, this blue line. So the coin was here, the coin was around here. That yesterday was around there. So I was expecting it to come down and touch my fair value gap. So I placed my entry at the middle of my fair value gap like this. I placed my entry there like this. So once you place your entry there, you have your stop loss. My stop loss was just around where it is now, around 7% as my stop loss, around 7% as my stop loss. Yes, thereabouts. But I think that is that I moved my entry downwards. Yeah, a little. So it was somewhere around there. Yeah, just like 5% there. Then okay. Then my take profits, I put it just somewhere around there, around 10%. You can see. You can see it. So this is the take profits, targets. Target is your take profits. Here is the number, 0.06822. That is the target. That's the take profit. So it was 10%, but I never posted the signal as 10%. I only said you should take 3% profit, which will be somewhere around here. So after it's delivered, I told us to enter again. We took another profit. We entered I entered like 7 to 10 times yesterday, even more than that. I entered multiple times. I was just taking the profit until it got to my target. So when it got to my target, that was when I stopped trading. It didn't even get to my target when I stopped trading. I just got tired of trading. I was like, I've seen a meaningful profit. So I stopped trading. I stopped trading for yesterday since I made a good profit. I stopped trading. So I hope you understand now. Samink, have you understood now? Have you understood now, Samink, how to set your take profits, how to get your take profit amounts, and how to get your take profit amounts and the other stuffs. Samink, I hope you have understood now. So let me see. Samink, I hope you have understood. Samink, have you understood now? So, what other question do we have? What other question do we have? What other question do we have? I see. Okay, I see. Ombeni Unyoga says how to set the first buy according to the capital. For instance, $100, $50, or $1,000. Okay, that is the last question I'm taking. So let's assume you're trading with your capital is $100. Okay, if your capital is $100, I told us to use 10x. So if your capital is $100, your first buying amount, you see, we have two first buying amounts. That is the first buying amount. And then we have the other one, which is the second first buying amount. So we have a first buying amount and a second first buying amount. Why do we have it like that? It's because you can be trading you can have a capital of $100 and then you enter the trade because we want to use risk management. Okay. You want to use small capital to start. And then if the coin goes against you, you'll be buying margins. It is very, very important to have money to be able to buy margins. The money that you have left in your account must always be more than the money that you have in trade. I come again. The money that you have left in your USDT balance must always be more than the money that you already have in trade. So if your capital is $100, make sure your robot doesn't use more than $40 for a trade. The remaining $60, keep it there, doing nothing. Keep it what? Keep it there, doing nothing. The $40 is enough to make you good profit. With that single $40, you can make a profit of $20 in a day, or $30, or even $40 in a single day. Okay. So we don't want you to risk your capitals. Risk management is very, very important, extremely important. So you don't say because we have dropped a signal, it is sure that it will deliver. You don't say because of that, you now put all your capital in the trade. It is very, very wrong. So you use from 5 to 10% of your capital as first buying amount. Or let me say 5 to 30% of your capital as your first buying amount. So now, oh no, let's just stay at 5 to 10% of your capital. Yes, don't exceed 10% of your capital as your first buying amount. So if you have $100, you are using $10 as your first buying amount, or $5. So the reason why we have two different first buying amounts is because if you enter with 5% of your capital, which is $5, and use a leverage multiple of 10, that means you have $5 times 10 in that trade, which makes it $50. But you will only be charged $5. The remaining $45 will be added by your exchange because you have used a 10x. So you are only paying 10% of your total amount in trade by yourself. So in such case, if the coin moves up and it sells, it gives you, let's say, 3% profit. That is 3% times start. So you use just $5 in your own capital and you made 3%. 3% of $5 is what? 3% of $5 is what? I'm explaining the reason why we use two different FBAs. See, I'm just going to explain briefly because I can't. This topic is part of the next episode, okay? Because I have to explain to you, how to configure, how to set your FBA, there's a lot in this FBA question. I just want to brief it. So now 5% of $50. I said 3% of $50. 50 times 3%. That is $1.5. So, oh no, 5% of $5. Your capital is 5. You have only used $5. So 5 times 3% of $5. That's $0.15. So you're supposed to be making $0.15 on that trade because you have only invested $5 of your money. It is the exchange that borrowed you the $5. So forget about what they borrowed you for now. But the fact is that your own money in the trade is $5. Now you have made a 3% profit, which makes it $0.15. Now, because you'll be wondering, why have they now borrowed me $45 when the 3% I made is still on my $5? No. This 3% that you have made on your $5, which is $1.15, will now be multiplied by 10. Okay, will now be multiplied by 10 as your profit. That means you're making 3% times 10, which makes it 30% of your capital. So you use $5 in the trade, you made 30% of $5, which is a $1.5. So the reason why we use two FBA is that so that when you enter the trade, the first FBA will be $10. You can extend it up to around 10% of your capital. So you can use 10% of your capital. Let's say you're using $1,000 as FBA as your total capital now. Use $100 or $50, which is 5% or 10% of your capital. Use it as your FBA. Okay. That means if you are using 10x, if your capital is $1,000, you put $1,000 there as your first buying amount with 10x. That means your exchange will only charge you $100 because $100 is the 10% of $1,000. You have used a leverage of 10x, which means you will only pay 10% of that $1,000 that you have put in the trade. So it's only $100 that they will remove from your money. So you have entered the trade with 10% of your capital. After entering with 10% of your capital, you now have a second FBA. As you are entering the trade, you make sure your AI margin call is on so that as the coin drops down or it goes against you, the robots will not immediately put in the same amount as your FBA. I said you use 5% as your FBA, but if you are using two FBAs, you can go as far as 10% of your capital as your first FBA. So after the first FBA, after the robot has bought, you make sure the AI margin call is on so that it will not buy another one. So after it has bought, the next thing is for you to go into the trade setting again and reduce the first buying amount back to what it was, 5% of your capital or $5, which is if you're trading with $100 capital, you have used $10 as your first buying amount, which is $100 on the 10x. Now you are left with $90. Okay, that $90, when you apply the X, that makes it $900. So if you have $100 capital right now, that $100 is $1,000 in futures. Okay, because futures will borrow you money according to your leverage. So you change to the second first buying amount, which will be 5. Let's say you're trading with $100. You have entered the first buying amount with your first buying amount, which is $10 times 10, making it 100. If you use the 10x, they will only charge you $10, remaining $90. Then you go back there, you change the first buying amount to 5. What is 5? 5 is 50, because 5 times 10 equals to 50. So if you use 50 like that with 10x, the robots will buy $50 for you into that dip, but it will only be taking $5 from your capital instead of the $50. So it will take $5, and then the exchange will borrow you $45. So that is how to use your first buying amount. For you that you are using $1,000, you use your first buying amount to be $1,000 with 10x. And after it buys that first buy, you go back there, you change it from $1,000, you change it to 50 with that same 10x. That makes it $5. So from $100, you have changed to $5. And if it's $100 that is your profit, you use your FBA as $100, which is $10 on the real, because you have used leverage. That is what makes it $100. So you use $100 as your FBA, and then once it buys, you go back to change it. Change it from 100, you change it to what? You change it to 50, which is 5. That's how to set your first buy in amounts. I hope you have understood. We will continue to expatiate about the topics during the week. We will have a lot of sessions in our team. We'll have a lot of sessions. Also, we have to continue this as soon as possible. I see that people are really ready to catch up with it. So if I find a signal tonight, I'm going to drop in the group. And if not, it is until tomorrow. So the best thing to do is to prepare. Preparation leads to congratulations. You have to always be prepared. It is better to be prepared for an opportunity and not have one than to not be prepared for an opportunity and have it. Okay, so let's prepare. Whatever, after the meeting, if you have any question, you can always come to my DM, or you can always ask your question in the group. Please, after the meeting, you can text me if you have a question. I will gladly answer you. But whatever needs to be explained will be on the next session that we hold in the week, right? So for today, this will be the end of our sharing. I see Umbeni asking if there is a coin to trade. It says any coin share screen. No coin for now. I'm not analyzing the markets for now. I told you, if we trade just 3 times in a week, it's enough. It is 5 times in a week, it is fine. Okay, so you don't have to panic. Just relax. Let's find our proper setup. When you go in trade one time with us, you know how to trade with a relaxed mind. It is very, very important to trade with a relaxed mind. Very, very important. Very, very important. So, thank you so much, everyone that has stayed this far. I believe there's no more questions. For now, I believe there's no more questions. I appreciate everyone that has came from the beginning until the ending of this meeting. I see Ade. This is Ade from Sweden. Am I right? Ade, is that you?
Yes.
Oh, I know that. Thank you for joining us. How is Sweden tonight? Okay. So Ade, thank you for joining us. I see business coach AY. Thank you for joining us. Delight Ob, my co-host. Thank you so much for joining us. I was on Zoom with Delight Hub last night from around 11 p.m. until around 4 a.m. We were on Zoom. We were studying together. I had a nice time with her last night. Delight Hub, thank you for coming. I believe we still have some things to discuss about from our last conversation of yesterday. Thank you for joining us.
You're
Okay.
welcome.
Yeah, thank you. Thank you. So I see Michael Bamidele. Thank you for joining us. I really appreciate it. I see Mpapa Charles. Yes, this is my wonderful mentee from is it UK? Yeah, I think he's from UK or Ghana. Yeah, he's a wonderful man, very, very energetic, and he's so ready to go on this exploration with us. Yeah, Papa Charles, I really, really appreciate your presence. Thank you for being here. So, I also see Mbeni in yoga, which is the last but not the least. The other people that joined us, they left earlier. Mbeni Yoga Ngoya. Mbeni Ngoya. Am I right? Thank you so much for joining us. I believe you have been able to get impacted with today's session. Whatever question you have, Mbeni. Okay, I believe I answered your question. I answered your question about the first buying amounts. I hope you understood, Mbeni. I hope you were fine with my response. I hope you were fine with my response. Okay, I see. Mbeni says he's fine with my response. Thank you so much. Okay, I see a response from Ade from Sweden. She says Sweden is great tonight. Oh, I'm happy to hear that. I'm happy to hear that. Oh, yes. Papa Charles says, thank you. Good night. Thank you so much. Thank you so much, my brother. Thank you, everyone. I really, really appreciate you for coming. Thank you so much. Thank you so much. It's all love from here. I love you, everyone. Have a wonderful night. Bye for now.